The tax filing season is now open. Time to get your ducks in a row. Let's welcome back our tax guru, accountant in private practice, and instructor at the College of Charleston, Thomase Spade. Welcome back.
It's so good to be back. It's been a hot minute.
It really has been a hot minute, and I think a lot of people, they're now stressed out again. The holidays are over, but now tax season is upon us.
Oh, not only is tax season upon us, it has now just opened up, so you can now file your returns for 2023. The deadline's going to be April 15th, as usual, but what's unusual is the people that filed an extension back in 2022 that got another extension due to Hurricane Idalia now have until February 15th. Clock is ticking. Get your paperwork in, get your returns filed for 2022 if you haven't.
Yeah, you don't want to be late on that.
You've already had a bunch of extra time.
You've had a bunch of extra time, no excuses. All right, let's talk about some of the new things that are going to be implemented in the future tax seasons, including beneficial interest reporting. This is something that's new. First of all, what is it?
It's beneficial ownership reporting, and this is brand new. If you own a business that has been filed with the Secretary of State's office, like a partnership, LLC, corporation, you now have to file a form with the Treasury Department disclosing who the owners of the business are. This is actually to help them make their job a little bit easier and to kind of prevent people from moving money from one business that they own to another, to another, to another, to try to shield it from tax.
Is that information typically hidden?
That information generally is hidden. You can find it if you do a lot of digging, but they don't have the resources to do that.
I see. Okay. Let's talk about the child tax credit.
Oh, yeah. So it's still $2,000, just like it was last year. The COVID relief stuff, that went away back at the end of 2021. But right now it's $2,000. Up to $1,600 of it this year is eligible to be refundable. So if you get your tax liability down to zero, you could still get a refund thanks to the child tax credit. But as of right now, there is legislation before Congress to improve that, and also has some other tax provisions. And when that gets through, I'll be back to tell you more about it.
Yes, okay, you definitely will be back. Let's talk about those gig side hustles, the 1099s. A lot of people are filing those this year.
Well, the 1099-K reporting from a lot of the third-party vendors that we thought were going to be going into effect this year, the IRS delayed that reporting requirement for another year. So, so if you have a gig business, though, if you're on the gig economy, you still have to file it.
You do.
You still have to disclose your income. You still have to disclose your deductions. You've still got to report it.
Okay.
So just because you don't get the 1099 and they don't have to issue it for another year doesn't mean you don't have to report it.
Gotcha.
You are signing the return under penalty of perjury.
Yes, you are. Energy efficient improvements on your home. Now, this is a big one because a lot of people like to save pennies here and there.
Absolutely.
But then you gotta fork over a lot of money to install that new water heater or the new AC units
or the new
roof,
windows or windows. Now, what's actually really nice about this? Roofs don't qualify, unfortunately, but but we now have an energy efficient credit, which we've had in the past, and it's been relatively generous in the past, but not so great. Now they've improved it, so it's now 30% of the cost, or $1,200 for most things, whichever is lower. But in the case of a heat pump, it's 30% of the cost, or $2,000. And under the old law, there was a lifetime cap on energy efficient improvement credits that you could get. That cap is gone. So now you can do all the energy efficient improvements you want year by year by year, but you're still going to be subject to that annual limit now.
I see. Okay. Now, if you turn 72 in 2023, there's something else going on.
If you turned 72 in 2023, first off, happy birthday. But if you turn 72 in 2023, that means that you can wait until you reach age 73 to start taking required minimum distributions out of your individual retirement account. So you get to a point where you are required to start taking money out of retirement that you've put aside that's been tax-free all of this time. Congress wants to start taxing it, so they make you start taking some of it out. But they have delayed that age. First, it was 70 and a half a couple of years ago. Then they kicked it to 72, and now it's 73. So if you fell under the old rules before, you still got to do it. But for anyone that turned 72 last year or is going to be turning 73 going forward, that's the age when they have to start doing it.
They have to start doing it, but you can also work around it, and that is with charitable giving.
That's right. Now there's a specific way that you have to do it. It's called a qualified charitable distribution. It counts as your required minimum distribution, but then it's not taxable to you. Now you don't get to double dip and also take a charitable contribution for it.
Okay.
But what's cool about it is it benefits your favorite charity, and you don't have to pay tax on it.
I like that. Let's end that on that note, shall we?
Sounds awesome.
Thank you so much for coming in. Thomase, great to have you. We're back after this.